You and a friend, you're pretty much financial twins. You both make the same salary, say $80,000 a year. You both find a house you love, same price, $500,000. You even go to the same bank to get a loan. But here's where things get weird. You get offered a loan at 7.8% interest, while your friend gets 5.9%. So what gives? It all boils down to one simple 3-digit number.
And that one number, it's the reason you could end up paying hundreds of thousands of dollars more over the life of your loan. We're talking a massive difference. This isn't just some random score. It's the secret key that quietly determines whether you spend your life building real wealth or just making payments.
You know, there's a saying that just absolutely nails it. In America, cash is king, but credit is the kingdom. Your FICO score isn't just about qualifying for a loan. It's about getting the keys to the entire financial kingdom and being welcomed on the best possible terms.
So, what on earth is this all-powerful number? Let's break it down and really get to know the game board we're all playing on, whether we realize it or not.
At its core, the FICO score is just a 3-digit number that runs from 300 on the low end all the way up to a perfect 850. The best way to think about it? It's your financial reputation, distilled into a single score. For lenders in the US, it's the quickest way they have to figure out, hey, if I lend this person money, what are the odds I'm getting it back?
And of course, this score is broken down into tiers. It goes all the way from poor at the bottom to excellent up at the top for scores above 800. That excellent tier, that's our target. That's the promised land where you unlock the best interest rates and the most attractive offers.
Now for the really important part. How is this score actually calculated? This is where we learn the rules of the game. Because once you know the rules, you can start winning.
Okay, just look at this chart for a second. The most important thing to notice is how much weight is given to the top two factors. You've got payment history at 35% and credit utilization at 30%. Add those together, and that's 65% of your entire score. It's huge. If you can just master these two, you are well on your way. So let's talk about the absolute king of the hill, payment history. It's worth a massive 35% of your score, and it answers one very simple question. Do you pay your bills on time? I mean, that's it. But here's the catch. Just one single payment that goes over 30 days late can torpedo your score, dropping it by 60, 80, even 100 points. The rule here is simple. Pay on time, every time. No exceptions. Set up autopay, it's your best friend. All right, next up is what I call the silent score killer, credit utilization weighing in at 30%. Now, this is the one that trips up so many people. It's basically the percentage of your available credit that you're using at any given moment. And here's the kicker. A high balance hurts your score even if you pay it off in full every single month. The math is really simple. It's just how much you've charged divided by your total credit limit. Now, the standard advice is to keep it under 30%. But you want the secret sauce? For an excellent score, you gotta keep it under 10%. Seriously, the folks with the highest FICO scores live in that 1 to 9% range. It's a game changer. Okay, let's quickly run through the other three pieces of the puzzle. You've got length of history at 15%. Basically, older accounts are better. So whatever you do, try not to close your very first credit card. Then there's credit mix at 10%. Lenders just like to see that you can handle different kinds of credit, like cards and maybe a car loan. And finally, new credit, also at 10%. This just means you don't want to apply for too much credit all at once, because it can look a little desperate. So now that we know the rules, let's go back to that story about you and your friend and look at the real-world scoreboard. This is where the numbers get, well, pretty staggering. Take a look at this. It just lays it all out. With that fair FICO score of 660, you got the 7.8% rate, and over 30 years, you'd pay about $800,000 in interest. But your friend, with that very good score of 780, they got the 5.9% rate and will only pay around $560,000 in interest. The difference is just mind-blowing. It's over $250,000, $240,000 for the exact same house with the exact same salary. The only thing that was different was financial behavior, and that was all reflected in that one little FICO score. Your credit score literally decides how expensive your life is going to be. Okay, so that's the problem. But here's the good news. What's the solution? How do you get on the winning side of that scoreboard? Let's talk strategy. First things first, and this is probably the most important part, it requires a total mindset shift. See, The real power of a great credit score isn't about getting more loans and more debt. The real power is in its ability to let you build wealth cheaply. Wealthy people use cheap debt, made possible by great credit, as a tool to buy assets that grow in value. So, the big question, of course, is how do you master this game and unlock that power for yourself? Here are your first 3 moves, and you can literally do these today. 1. Check your credit report. You gotta know where you stand. 2. Set up autopay for every single bill you have. Make it impossible to be late. And 3. Attack that silent killer. Get your credit utilization under 10%. Pay off your balances before the statement date if you have to. Just get it done. And I want to leave you with this final thought. Good credit won't make you rich, but bad credit will absolutely keep you poor. Mastering your FICO score isn't just about saving some money on interest. It's about buying yourself the financial freedom to build the life you actually want.